Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, February 29th. So today we'll be doing a recap of the currency markets. We'll be taking a look at any meaningful news of the day, looking at the broader equity markets, some commodity analysis as well. We're then going to do some technical analysis on the major stock market index, the S&P 500. We're going to take a look at our currency baskets, see if there's any major news reports to close out the week, and then look at some possible currency setups. Let's get into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. If you are a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Now let's break down today's market action. Starting off with some market analysis. All right, so news for the day is pretty straightforward. Risk on appetite continues. Unemployment claims came in below expectations. Core PCE met expectations. And all this has resulted in fairly muted FX volatility. But there is a bit of an interesting story happening here in the currency markets, and we're going to discuss that later on. So make sure you stick around for that because it's very important, and it highlights an interesting divergence between how risk on assets like crypto and the stock markets are behaving and how our fiat currencies are behaving. So if we're looking at our values here in terms of how our different markets have done, obviously stocks did very well today. Gold has had a rebound, strong rebound. And that crypto basket is a little bit deceiving because Bitcoin's been on an absolute tear. Since last Friday, it's been up like 20% or so. So for it to pull back a little bit now is completely understandable. The total world stock index up a little bit and oil down about 0.33% on the day. Taking a look at our fiat currencies. So this is what's interesting, right? Is that the yen was the strongest performer today. Why is that? Well, we'll get into that in a little bit. The dollar pretty much flat. The Swissy was the biggest loser, joined by its European counterparts, the euro and the pound. The loonie and the Aussie held their heads above water, and the Kiwi down about 0.25%. And now we're going to look at our cryptos. So Litecoin up 11%. There's a couple other current cryptos that we don't cover in these updates that have been on an absolute tear today. Solana up around 11 or 10% as of recording as well. But yeah, we can see Bitcoin pulled back a little bit, down roughly 0.5%. Bitcoin Cash up nearly 4% and Ethereum up over 0.5%. So the market outlook does not change. We remain at a +3. All systems are green. We're above both moving averages and the slope is positive. Nothing more to add there. This picture is going to look very different some point in the relatively near future, but trying to time exactly when a market top is going to occur is a fruitless exercise, all right? This is why mechanical trend scoring systems are so important. Moving on now to some news. So we have some manufacturing data coming out of China later this evening. Could be a potential market mover for the Australian dollar and by extension the Kiwi dollar, but it's not something I'll personally be looking at and be interested in whatsoever, just personally. Tomorrow we have some manufacturing data and revised consumer sentiment. Those could potentially be market movers if we get a wild result that is off expectations, either up or down. Okay, so getting down to some currency analysis, this is where things start to get a little bit more interesting. So the yen at a +2, dollar at a +1, the Aussie pretty much flat, euro, pound, and Kiwi at a -1, and then the Swissy at a -3. So let's keep that in mind right now as we head on over to TradingView. So starting off with the yen, this is why patience is so important for traders, right? I've been saying for a while now, wait until we break below this support level, which is the lows from November 15, 16 in the yen. And then let's see if we pull back up to that broken support level to treat it as valid resistance. And today we broke right through it. If you heeded my advice in terms of being patient and didn't just short the yen just because we bumped up against that resistance level, then you would have stayed out of trouble today. If you didn't, then it's possible you might have ended up on the wrong side of the market. Now, let's explore why I think this rally in the yen is ultimately still counter trend, at least for now, and what parameters I'm looking for to go short. Okay, so if first things first, if we draw a nice trend line off these highs here, you can see exactly where we are today, and that is, well, we've top wicked that trend line. So if this trend line continues to hold the way it has on 3 previous occasions, then we'll see a yen reversal. If the yen breaks through that trend line, it's still not sunny days and clear blue skies for the yen. There is some immense structural resistance and overhead supply here in the yen basket. So, I'd say anything in that range from Friday, Feb 2nd is going to be absolutely brutal for the yen to break through. So it's got a lot to do in terms of proving itself to us. Personally, I'm still looking for short setups. I'm going to respect this trend here. And so long as the short setups materialize, I'm happy to play the short side in the yen. However, if we break above this block of supply here and clear the wick from February 1st, then I'll be looking for potential bullish scenarios. But we're still a ways away from that even being remotely considered a possibility. Moving on now to the dollar. Well, we got that breakout of the channel I've been calling for, and then we got this nice hammer candle, that long lower wick a few days later, and that has cast any further downside in doubt. The problem is the upside's in doubt as well, because we're still below the support line of this parallel channel. For the dollar to get really bullish, we'd have to trade back inside the support channel, which would mean probably taking out those highs. So we'd have to take out those highs and then look for a basing pattern in order to trade the dollar to the upside, in my opinion, if you want to do it relatively conservatively. Otherwise, you could look for this rally to roll over. If we look at where we are, do we have a potential head and shoulders pattern? Maybe. We have a neckline, potential neckline here, and then we have the left shoulder here and the right shoulder here and the head here. That's possible. So if we start trading sharply lower and break through the neckline, then yes, I'd be looking for lower in the dollar. Moving on now to the Swiss franc, which has not had a good day today. Still need to see the Swissy trade a little bit lower in my estimation before buyers will step in. So anywhere around 140, anywhere around 140 would be a great support zone. Those are the lows from 14th, 15th, and the 18th of December. Okay. Next up is the euro, which you can see here we broke above and then immediately came back below these lows. So there was some buy side liquidity, up above there that got snatched, and then there's some sellers here that also got stopped out, right? So a little move up, and that was the fake. We now just have to wait and see. We're either going to get a steady stream of little bases and continuation patterns as the euro trades lower, or we're going to get a nice controlled pullback, something like this, and then we're going to be able to look for a bullish setup there. Do I want to be buying the euro? I really don't, because I'm still looking at this large leg down, which started on November 20th, this large leg down here. And this just looks like a bear market rally to me. The only thing I don't like about this large bearish leg down is that we couldn't really close decisively below the October 4th support, which is this gray zone I have here. So although we haven't cleared that, and that's why I'm not ultra bearish on the euro, I still think we're more than likely to start retesting the lows from the beginning of February, which would be a nice move lower. The pound still stuck in this range. We tried to break out. We're still inside of it, but the lows are rising, right? So it is getting reasonably possible that we're going to get an upside breakout here in the pound. If you're a range trader, this isn't the worst place in the world to be looking for shorts in the pound towards the bottom of that range. Okay, the loonie, really not interested in buying the loonie for sure. We finally got this broke down below this trend line. I've been waiting for it. We're now likely to see some kind of base, and then we can trade that base lower if we get a breakdown of that base, if we get a base. But that's ideally what I'm looking for in the loonie. Aussie dollar. We broke out of the range, got sucked right back into it. I guess we can just widen the range now since there doesn't seem to be a clear trading direction in the Aussie. I think the Aussie is generally best left alone for now. And the New Zealand dollar, we did hit that resistance area I called out last week, and we're now back in the range as well. So now what we can do, we can just extend this range a little bit further right now. Would I look for buys in the Kiwi dollar? Yes, but not till we trade a little bit lower. Still think it's in relatively premium pricing territory here. If we can push down to this block of orders here from the end of January, early February, I'd be much more interested in looking for longs. All right, traders, that wraps things up. So in conclusion, just always look for relative strength and relative weakness. That is the easiest way to trade currencies. It's the easiest way to trade anything, to be honest, but currencies in particular, because they're always valued relative to one another. They're traded in pairs. We all know this, of course. Also, make sure to follow your trading plan at all times, and your trading plan should, of course, include guidance on what proper position sizing looks like. Don't really have any events. Fun fact, the reason we have 29 days in February is because it is a leap year this year. Happens about every 4 years. All right, folks, I'll see you next week. Bye for now.